Hello, Greg Wolf from Options University. Today is December 25th, 2007. Merry Christmas. Today is my weekly recap and market outlook for the forthcoming few days now in a shortened week, with today being the holiday, yesterday being a short day on the markets, with the U.S. equities markets closing at 1 p.m. Friday ended up being a short day volume-wise, so we're looking at really a kind of a quiet couple of weeks here going into the end of the year. Little bit of macroeconomic data to report last week. Nothing of true import. The housing numbers pretty much came in line. There were some interesting earnings coming out of the financial sector and news coming out of the financial sector, which would continue yesterday, with Merrill Lynch revealing that they agreed with GE Capital for GE Capital to purchase most of Merrill Lynch Capital Corp, which is their arm in Chicago, which would add $10 billion in assets and $5 billion in commitments to Merrill's balance sheet, freeing up $1 billion in loans for the firm to use to remain solvent, which is what a lot of these financial institutions are doing at this point. This, of course, coming off the heels of Morgan Stanley taking in $5 billion last week from a Chinese investment group. And then, in addition, Merrill Lynch added $5 billion in investment from another Singapore bank, not the one that came to the aid of UBS recently. This bank is called Temasek, which agreed to pay $48 per share with a $5 billion stake at $48 per share. This is when Merrill was trading at $54 per share. So that sounds a little bit suspicious to me. Citigroup took in the $7.5 billion from Abu Dhabi. UBS took in the $9 billion from the Singapore bank. And really, from a macro standpoint, what we continue to see is the financial group is the catalyst for what's going to happen in the markets here as we move forward. The financial index near the year-to-date lows, flirting with it. On that news, yesterday, Merrill rallied. If I can get the chart up here, might help. Merrill Common rallied on the news, but then sold off to give up $1.64 on the day. So really what's going on here is it seems as though you might get a short-term pop from this cash that's coming in, but then everybody's pretty much saying, wait a second, is this good? Can this be good for the U.S. economy? All these, and it's really unprecedented from the standpoint of a prognosticator or somebody that's trying to speculate on where the market's going to go and when. It's really difficult to see much bullish news as we continue and go ahead, as we've been saying for quite some time now here at Options University, which is why it's good in this type of environment of uncertainty to know your option strategy and be able to lock into trades where you can be certain exactly what type of risk you have going on here. The Lehman earnings that came out, once again, they were taken initially to be bearish. Stock added after that. The other financial institutions that reported last week, Morgan, the digestion of the market really is very unpredictable at this time. So that is something we should be looking forward to. First off, let me get to where we are now in the major indices from where we were last Monday. The Dow went out yesterday at 13,549 to close up about 179 points for that week's time. The Nasdaq Composite went out at 2715, up 92 for the week, ending yesterday. The S&P 500 went out at 1496, adding 31. And as you might not expect, with the markets going up yesterday, the VIX did add, the volatility index did add a little bit to go out at 1860, but not nearly enough to make up the losses for the week, because we opened on last Monday at 2413, and went out at 1860, which is a shave off of 5.53 for that week. However, if you're looking at the volatility index, we have to remember one of the components of volatility, in addition to serial correlation, is mean reversion, and the VIX is a gauge of that fear index. So we should see some mean reversion going on here. We're at the 200-day moving average. Looks like we saw a little bit of support there, and we have a couple of gaps still to fill right here. Of course, we could see some low volume buying in this market at this point, going into the end of the year, the quote-unquote Santa Claus rally. But once again, very hard pressed to see that continuing into January and February. So if I can pull up another chart here.